Hello there and welcome. Whether you're taking your very first steps into the extraordinary world of trading, or perhaps you've been following along for a while now, I must say, I'm genuinely thrilled to have you here with me today. Now, let me tell you what we're embarking upon together. This presentation, The Day Trading Journey, Complete Beginner's Guide, is not just another collection of slides. Oh no, this is your comprehensive, step-by-step roadmap, a proper blueprint, if you will, designed to transform you from wherever you are right now into a successful, confident day trader. And here's what makes this truly special. You'll be learning directly from someone with over 4 years of real, hands-on trading experience. Not theory from textbooks, mind you, but actual battlefield wisdom, forged in the markets, tested across Forex, futures, and cryptocurrency. Every lesson, every insight you'll encounter has been distilled from genuine experience, from thousands of hours watching charts, making trades, and yes, learning from both spectacular wins and humbling losses. But here's the absolute best part, and I want you to really hear this. Everything, and I mean everything, is completely free. No hidden courses lurking behind paywalls. No slick sales pitches waiting to ambush you at the end. No empty promises of overnight riches. Just actionable, proven resources that actually work. You see, the philosophy here is refreshingly simple. Provide top-tier education without the gimmicks. Because let's be honest, the trading education space is absolutely cluttered with people trying to sell you the dream. But this is different. This is about giving you real methods, proven strategies, and honest guidance. Now, I want to draw your attention to something rather important at the bottom of this slide. Notice those 4 pillars: free education, proven strategies, community support, and our 8-step roadmap. These aren't just decorative icons. These are your 4 cornerstones of success. Free education means you're not starting with a financial handicap. Proven strategies means we're not experimenting with your time or potential capital. These methods work across multiple markets and have stood the test of time. Community support? Well, you're never alone in this journey. And that 8-step roadmap? That's your structured path from complete beginner to profitable trader. So, as we begin this journey together, I want you to approach this with an open mind, a commitment to learning, and realistic expectations. Trading isn't a get-rich-quick scheme, but with proper education, discipline, and the right guidance, it absolutely can become a legitimate, profitable skill. Are you ready? Brilliant. Let's begin this remarkable journey together. Now then, let's get properly acquainted, shall we? This section is titled Welcome and Introduction, and I think it's rather important that you understand who's guiding you through this journey and what qualifies me to do so. You see, I'm not someone who simply read a few trading books and decided to teach. No, I've been actively trading for over 4 years now. 4 years of real, hands-on experience in the markets, watching price action unfold in real time, executing trades, managing risk, and, yes, experiencing both the exhilaration of profitable trades and the valuable lessons that come from losses. Now, let me tell you about the markets I specialize in. You'll see 3 cards here on your screen: Forex trading, futures trading, and crypto trading. These aren't just abstract concepts I've studied. These are the actual battlegrounds where I've spent countless hours. Forex trading, that's currency pairs, the foreign exchange market, the largest financial market in the world, where trillions of pounds are exchanged daily. I've learned to read the ebbs and flows of currency movements, understanding how global economic events ripple through these markets. Then we have futures trading, derivatives markets. This is where you're trading contracts for future delivery of assets, whether that's commodities, indices, or currencies. It's a sophisticated market that requires precision and discipline, and I've spent considerable time mastering its nuances. And crypto trading, digital assets. Now, this is the newest frontier, isn't it? Bitcoin, Ethereum, and other cryptocurrencies. While I'm more cautious about this space, and we'll discuss why later, I've still gained valuable experience navigating these volatile waters. Here's what makes this education truly valuable, and I want you to pay attention to this highlighted portion. Everything you'll learn comes from real experience. Not hypothetical scenarios from textbooks, not back-tested strategies that only work on paper, but actual, battle-tested wisdom gained from years of trading across diverse market conditions. And notice what I'm emphasizing at the bottom here: real experience. No gimmicks, no sales pitches, just proven strategies that I've personally refined through years of trading. I've experienced bull markets and bear markets, trending periods, and choppy consolidation. I've traded during major economic announcements and quiet summer sessions. Every lesson I share with you has been forged in the real markets. Every strategy has been tested with actual capital at risk. Every principle I teach you is something I personally use in my own trading. This isn't theory. This is practical, actionable knowledge from someone who's been in the trenches and is still actively trading today. And I'm offering this to you completely free because I believe access to quality trading education shouldn't be a privilege reserved only for those who can afford expensive courses. So, with that foundation established, let's continue our journey together, shall we? Now then, let's talk about mission and philosophy. This is absolutely fundamental, and I want to be crystal clear about what this channel stands for and what you can expect from me. First and foremost, free, top-tier education. Notice those words carefully. Free and top-tier. This channel provides completely free trading education. And I'm not talking about some watered-down content with the good stuff hidden behind a paywall. No, no, no. Everything. The strategies, the analysis, the concepts, the daily market commentary, it's all available to you at no cost whatsoever. You might be wondering, well, why on earth would someone do that? And it's a fair question, isn't it? Here's the thing. I genuinely believe that access to quality trading education shouldn't be a privilege reserved only for those who can afford expensive courses. The financial markets themselves are challenging enough without adding a financial barrier just to learn how to navigate them properly. Now, let's address what you won't find here. No gimmicks. Look at this clearly. No courses to sell. I'm not going to spend weeks teaching you the basics, only to suddenly announce that the real secrets are in my premium course that costs thousands of pounds. That's simply not how we operate here. No empty promises. I won't tell you that you'll be making £10,000 a month after watching 3 videos. That would be dishonest. And frankly, it would be setting you up for devastating disappointment. And absolutely no guarantees of overnight success. Trading is a skill, much like learning a musical instrument or mastering a foreign language. It takes time, dedication, practice, and yes, patience. Anyone promising you overnight riches in trading is either deluded or deliberately misleading you. Here's what makes this approach so powerful. Universal principles that work. The core concepts I teach: market structure, price action, risk management, trading psychology. These principles apply across all markets. Whether you're trading stocks, cryptocurrency, Forex, or futures, the fundamental dynamics remain remarkably similar. Think about it. A support level works the same way whether you're looking at a Bitcoin chart or a currency pair. Market psychology, the fear, greed, and herd mentality that drive price movements, these are universal constants. Supply and demand principles don't change whether you're trading on the London Stock Exchange or a cryptocurrency platform. This universality is brilliant because it means you're not learning some niche strategy that only works in one specific market during one specific time period. You're building a foundation of knowledge that will serve you across different asset classes and remain relevant regardless of how technology or markets evolve. The education here is built on timeless principles, not fleeting trends. While new indicators and trading platforms may come and go, the fundamental understanding of how markets move and how to read price action, that remains constant. And that's precisely what I'm equipping you with. So, in summary, completely free, genuinely comprehensive education with no hidden agenda, no sales funnel, and no gimmicks. Just honest, practical trading knowledge designed to give you a real fighting chance in the markets. That's the mission, that's the philosophy, and that's what we're building together here. Right then, it's time we have an honest conversation. This slide is titled "The Hard Truth About Trading," and I believe strongly in setting realistic expectations from the very beginning. So let's address this head-on, shall we? Trading is not easy. I know, that's probably not what you wanted to hear. You've likely seen advertisements showing people on beaches with laptops, claiming they made a fortune trading just a few hours per week. But I'm here to give you the truth, not a fairy tale. Here's what's fascinating though, and pay close attention to this. The technical aspects, they're actually quite straightforward to learn. Reading charts, identifying patterns, understanding indicators. These are skills that most people can acquire with dedicated study. The technical knowledge is learnable. It's like learning the rules of chess. You can master them relatively quickly. And fundamental analysis, market news, economic indicators, company earnings. Again, this is information you can study and understand. It's not impossibly difficult. With time and effort, you can become proficient at analyzing the fundamental factors that move markets. But here's where it gets genuinely challenging, and this is what separates successful traders from the 95% who fail: the psychological aspect. The biggest challenge, the real battle, is psychological resilience. This is the mountain that most traders simply cannot climb. Let me break this down for you. First, there's managing losses. When you watch your account drop by £500, £1,000 or more in a matter of hours, your body floods with stress hormones. Your heart races, your palms sweat. Every fiber of your being wants to either close the position immediately to stop the bleeding, or worse, to revenge trade and try to win it all back quickly. Managing this emotional response, staying disciplined when your brain is screaming at you, that's extraordinarily difficult. Then there's avoiding overconfidence after wins. You have 3 winning trades in a row, and suddenly you feel invincible. Your position sizes start creeping up. You stop following your trading plan as strictly. You think, "I've figured it out. I'm brilliant at this." And that's precisely when the market typically delivers a humbling lesson. Maintaining humility and discipline during winning streaks is perhaps even harder than managing losses. And maintaining discipline in volatile markets? Oh my goodness. When the market is moving fast, really fast, when prices are jumping up and down, when news is breaking, when everyone seems to be making money except you, staying disciplined, sticking to your strategy, not chasing trades out of fear of missing out, that requires tremendous mental fortitude. Here's what I strongly recommend, and I cannot emphasize this enough. Before diving into trading, explore content on trading psychology. Read books like Trading in the Zone by Mark Douglas. Watch videos about the psychological aspects of trading. Understand cognitive biases, things like loss aversion, confirmation bias, and the sunk cost fallacy. Building mental toughness is just as important, if not more so, than learning technical analysis. You see, you can have the best strategy in the world, but if you can't execute it consistently because your emotions are overriding your logic, that strategy is worthless. Think of professional traders. What separates them isn't some secret indicator or magical strategy. It's their ability to execute their plan with discipline, to manage their emotions under pressure, to accept losses without letting them derail their entire approach, and to maintain consistency over thousands of trades. So yes, I'm being honest with you about the challenges, but here's the encouraging part. Psychological resilience can be developed. It's not something you either have or you don't. Through proper education, through practice with demo accounts, through journaling your trades and emotional responses, through meditation and mental preparation, you can build this resilience over time. The traders who succeed are the ones who acknowledge this psychological challenge and actively work to develop their mental game. Don't ignore this aspect. Don't think you'll be the exception who doesn't struggle with emotions. Prepare yourself mentally, and you'll be miles ahead of the competition. Right then, it's time we have an honest conversation. This slide is titled, "The Hard Truth About Trading," and I believe strongly in setting realistic expectations from the very beginning. So let's address this head-on, shall we? Trading is not easy. I know, that's probably not what you wanted to hear. You've likely seen advertisements showing people on beaches with laptops, claiming they made a fortune trading just a few hours per week. But I'm here to give you the truth, not a fairy tale. Here's what's fascinating though, and pay close attention to this. The technical aspects, they're actually quite straightforward to learn. Reading charts, identifying patterns, understanding indicators. These are skills that most people can acquire with dedicated study. The technical knowledge is learnable. It's like learning the rules of chess. You can master them relatively quickly. And fundamental analysis, market news, economic indicators, company earnings. Again, This is information you can study and understand. It's not impossibly difficult. With time and effort, you can become proficient at analyzing the fundamental factors that move markets. But here's where it gets genuinely challenging, and this is what separates successful traders from the 95% who fail: the psychological aspect. The biggest challenge, the real battle, is psychological resilience. This is the mountain that most traders simply cannot climb. Let me break this down for you. First, there's managing losses. When you watch your account drop by £500, £1,000 or more in a matter of hours, your body floods with stress hormones. Your heart races, your palms sweat. Every fiber of your being wants to either close the position immediately to stop the bleeding, or worse, to revenge trade and try to win it all back quickly. Managing this emotional response, staying disciplined when your brain is screaming at you, that's extraordinarily difficult. Then there's avoiding overconfidence after wins. You have 3 winning trades in a row, and suddenly you feel invincible. Your position sizes start creeping up. You stop following your trading plan as strictly. You think, "I've figured it out. I'm brilliant at this." And that's precisely when the market typically delivers a humbling lesson. Maintaining humility and discipline during winning streaks is perhaps even harder than managing losses. And maintaining discipline in volatile markets? Oh my goodness. When the market is moving fast, really fast, when prices are jumping up and down, when news is breaking, when everyone seems to be making money except you, staying disciplined, sticking to your strategy, not chasing trades out of fear of missing out, that requires tremendous mental fortitude. Here's what I strongly recommend, and I cannot emphasize this enough. Before diving into trading, explore content on trading psychology. Read books like Trading in the Zone by Mark Douglas. Watch videos about the psychological aspects of trading. Understand cognitive biases, things like loss aversion, confirmation bias, and the sunk cost fallacy. Building mental toughness is just as important, if not more so, than learning technical analysis. You see, you can have the best strategy in the world, but if you can't execute it consistently because your emotions are overriding your logic, that strategy is worthless. Think of professional traders. What separates them isn't some secret indicator or magical strategy. It's their ability to execute their plan with discipline, to manage their emotions under pressure, to accept losses without letting them derail their entire approach, and to maintain consistency over thousands of trades. So yes, I'm being honest with you about the challenges, but here's the encouraging part. Psychological resilience can be developed. It's not something you either have or you don't. Through proper education, through practice with demo accounts, through journaling your trades and emotional responses, through meditation and mental preparation, you can build this resilience over time. The traders who succeed are the ones who acknowledge this psychological challenge and actively work to develop their mental game. Don't ignore this aspect. Don't think you'll be the exception who doesn't struggle with emotions. Prepare yourself mentally, and you'll be miles ahead of the competition. Excellent! Now let's discuss how to make the most of this channel. I've structured this content very deliberately, and if you follow these 3 key principles, you'll extract maximum value from your learning journey. So let's go through each point carefully. Number 1, watch the playlists. Notice I didn't say watch some videos or pick and choose topics that interest you. I said watch the playlists, the entire playlists. And there's a very specific reason for this. The playlists are structured to take you from beginner concepts to advanced trading principles, step by step. It's a carefully designed learning progression. Each video builds upon the previous ones. I've spent considerable time organizing this content in a logical sequence that mirrors how professional traders actually develop their skills. Think of it like building a house. You can't start with the roof, can you? You need the foundation first, then the framing, then the walls, and finally the roof. Similarly, you can't skip to advanced concepts like order blocks and institutional trading without first understanding basic market structure. The sequence matters enormously. Number 2, treat each video like a building block. This is such an important concept. Think of each video as a piece of a puzzle. Individually, each piece might not reveal the complete picture, but together, they form a cohesive understanding of the markets. For example, you might watch a video about support and resistance. On its own, that's useful. Then you watch another about candlestick patterns. That's also useful. But when you combine that knowledge with videos about market structure, volume analysis, and risk management, suddenly you're not just seeing individual concepts, you're seeing how they all interconnect to form a complete trading approach. This is why people who skip around often struggle. They have pieces of the puzzle scattered about but no coherent picture. They understand isolated concepts but can't synthesize them into a practical trading methodology. Don't make that mistake. Watch systematically, and you'll see how each piece connects to create the whole framework. Number 3, commit to learning. And I want to emphasize what this really means. This content is not flashy entertainment. I'm not here to amuse you with dramatic music and flashy graphics and sensationalist claims. There are plenty of trading channels that do that, if that's what you're after. This content is created to give you a strong foundation in trading. It's educational in the truest sense. Sometimes it's technical. Sometimes it requires you to pause, rewind, and really think about what's being explained. Sometimes you'll need to watch a video twice, or even 3 times before the concept truly clicks. But here's what this commitment provides: something that will serve you for years to come. Not quick entertainment that you forget in an hour, but fundamental knowledge that becomes part of how you see and understand markets. This is the kind of education that compounds in value over time. Think about it this way: you could spend 3 hours watching entertaining trading content that makes you feel excited, but teaches you little of substance. Or you could spend 3 hours truly engaging with educational content that might be less immediately entertaining, but gives you skills and knowledge you'll use for the rest of your trading career. Which is the better use of your time? My videos are packed with years of experience and hard-earned lessons. I've distilled knowledge that cost me thousands of pounds in mentorships, countless hours of screen time, and yes, painful trading losses into actionable insights for you. Completely free. But you need to engage with it properly to extract that value. So here's your action plan. Start with the beginner playlist. Watch every video in sequence. Take notes, pause and reflect when new concepts are introduced. Ask questions in the Discord when something isn't clear. Treat this like the valuable education it is, not like passive entertainment. If you commit to this approach, if you genuinely engage with the learning process, you will be astonished at how much your understanding develops. But it requires commitment. It requires treating these videos as building blocks and giving them the attention they deserve. Are you ready to commit to that? Brilliant, because that's precisely the mindset that separates traders who succeed from those who perpetually struggle. Now, let's discuss something absolutely crucial: timeless trading strategies. And I want you to really understand what makes certain trading approaches timeless versus fleeting trends. Core principles are unchanging. The fundamental principles of trading haven't changed. And quite frankly, they likely never will. Why? Because they're rooted in human psychology and the basic dynamics of supply and demand. And human nature doesn't change. Think about this for a moment. 100 years ago, traders in the stock exchanges were driven by the same emotions that drive cryptocurrency traders today: fear, greed, hope, panic. The technology has changed dramatically. We've gone from ticker tape to high-speed internet and algorithmic trading, but the underlying psychology, remarkably consistent. Market psychology and fundamentals remain constant. When there's more buying pressure than selling pressure, prices rise. When fear dominates, prices fall. When markets are uncertain, they consolidate. These aren't new phenomena. These are eternal market characteristics. Support and resistance levels, areas where price historically found buyers or sellers, worked in the 1920s, and they work today. Price action patterns, how buyers and sellers reveal their intentions through candlestick formations and chart patterns. These worked decades ago, and they work now. Now, here's where many traders go astray. And I want to warn you about this. Don't get distracted by flashy new methods or sales pitches for the next big thing. Every few months, it seems, someone comes along claiming they've discovered some revolutionary new trading method that makes everything else obsolete. This AI indicator predicts the market with 98% accuracy, or This secret strategy used by hedge funds will change your life. Or forget everything you know. This new approach is the only thing that works now. It's all nonsense, I'm afraid. These are marketing tactics designed to separate you from your money. The reality is far less exciting, but far more reliable. The principles that have worked for decades continue to work because they're based on fundamental market dynamics that don't change. Yes, new tools and strategies might come along. Technology evolves. Trading platforms become more sophisticated. We get access to more data, better charting tools, faster execution. But the core understanding of why markets move, the fundamental principles, those remain constant. Here's my advice, and please take this to heart. Stick to proven concepts, and you'll build a solid base for success. Learn proper market structure analysis. Understand how to identify high-probability trading zones. Master risk management. Develop discipline and emotional control. These skills are timeless. You don't need the latest, greatest, flashiest indicator that promises to solve all your problems. What you need is a solid understanding of how markets actually work, combined with a proven strategy that you execute with discipline. Think of it like learning to drive. The fundamental skills, steering, accelerating, braking, awareness of your surroundings, these don't change whether you're driving a vintage car from the 1960s or a modern electric vehicle. Yes, the vehicles have different features and technologies, but the core principles of safe, effective driving remain the same. Trading is similar. The instrument might be different. Maybe you're trading Forex instead of stocks, or Bitcoin instead of gold. But the principles of reading market structure, identifying value areas, managing risk, and executing with discipline, these transcend the specific instrument. So here's what I want you to take away from this slide. Focus on learning the timeless principles. Don't chase every new strategy that promises easy money. Don't get distracted by fancy indicators with impressive names. Instead, build your foundation on concepts that have proven themselves over decades of real market conditions. When you have this solid base, you'll be able to adapt to any market, any time frame, any instrument. You'll understand the why behind price movements, not just the what. And that understanding, that deep comprehension of market dynamics, that's what truly timeless trading is built upon. Trust the process, focus on the fundamentals, and you'll develop skills that serve you not just for the next few months, but for your entire trading career. Right then, let's talk about community, shall we? Because trading, while it requires individual discipline and execution, doesn't have to be a solitary journey. And that's where our free Discord community comes in. Join the free Discord community. Notice that word free. I want to emphasize this because it's genuinely important. This is a space for traders to connect, share ideas, and support one another without any pressure of premium subscriptions or paid upgrades. None of that nonsense. You see, one of the most valuable aspects of learning to trade is being able to discuss concepts with others who are on the same journey. When you're watching a video and something doesn't quite click, wouldn't it be brilliant to be able to ask a question and get a response from someone who's recently worked through that exact same concept? Or better yet, from me directly. The Discord community provides exactly that. It's a dedicated space where you can ask questions, share your analysis, discuss trade setups, and learn from others' experiences. And here's what makes it particularly valuable. I'm more active on Discord than anywhere else. The response time is much quicker there than in YouTube comments or other platforms. Think about it this way. If you're stuck on understanding market structure, or you're confused about how to properly identify an order block, or you're not quite sure how to apply the strategy to a specific chart setup, you can post your question in Discord, and you'll typically get a response much faster than through other channels. Now, here's something quite important. All questions are visible to everyone in the community. This is brilliant, because when you ask a question, the answer benefits not just you, but potentially dozens or even hundreds of other traders who had the same question, but perhaps didn't ask. And conversely, you'll benefit from seeing questions others ask that you hadn't even thought about yet. The community aspect also provides accountability and motivation. When you see other traders sharing their progress, their demo account results, their funded account milestones. It reminds you that success is genuinely possible. It keeps you motivated during those inevitable periods when trading feels frustrating, or when you're tempted to give up. And there's something else I want to mention here. Without the pressure of premium subscriptions or paid upgrades, many trading communities operate on a tiered system. Free members get basic access, but the good stuff is reserved for paid premium members. That creates an unfortunate dynamic where you're constantly being upsold. We don't do that here. Everyone in the Discord has the same access. There's no hierarchy based on who's paid what amount. It's a genuine community of traders helping each other improve. Now, I will say this. In the future, I might offer some additional services, perhaps one-on-one mentoring for those who want more personalized guidance, or possibly some advanced courses for traders at a more sophisticated level. But here's my commitment to you. The heart of what I do will always remain free and accessible. The core education, the videos, the strategies, the daily analysis, the community support, that foundation will always be available at no cost. Any future paid services would be truly optional additions for those who want them, never replacements for the free content. So here's what I encourage you to do. Join the Discord today. Not tomorrow, not next week. Today. Get familiar with the channels. Introduce yourself. Start engaging with the community. Ask your first question. Share what you're working on in your trading education. The sooner you join, the sooner you become part of this supportive community. And trust me, having a group of like-minded traders to discuss ideas with, to share frustrations with, to celebrate successes with, it makes the learning journey significantly more enjoyable and effective. Trading can be a rather isolating pursuit if you're doing it entirely alone, but it doesn't have to be. Join us in Discord, and you'll never feel alone in your trading journey again. Excellent. Now we've reached a particularly important section, our roadmap to trading success. This is where theory meets practice, where we lay out a clear step-by-step path that will take you from wherever you are right now, whether you're an absolute beginner or someone with some experience, all the way to becoming a consistently profitable trader. This roadmap consists of 8 carefully structured steps, and I want you to understand something crucial. This isn't just some arbitrary list I've thrown together. This sequence has been deliberately designed based on years of experience, both my own trading journey and from observing what works for successful traders and what causes struggling traders to fail. Each step builds upon the previous one. Each step is essential, and perhaps most importantly, each step has a specific purpose in your development as a trader. We're not going to skip around randomly. We're not going to rush through the fundamentals to get to the exciting stuff. We're going to proceed systematically, ensuring you build a rock-solid foundation. Now, let me give you a preview of what's coming. We'll start with step 1. Joining the Discord community and getting familiar with TradingView, which is the essential charting software you'll be using. This might seem simple, but establishing these connections and tools right from the beginning is absolutely crucial. Then we'll move through steps focused on education, watching specific playlists in a particular order, understanding why that sequence matters, and really absorbing the concepts rather than just passively viewing content. From there, we'll progress to strategy selection and backtesting. This is where you'll choose one specific approach and test it thoroughly. And I mean thoroughly, before risking any real capital. Then comes demo trading, where you'll practice executing your strategy in real market conditions, but without financial risk. This is where psychological resilience starts to develop. After that, we'll discuss transitioning to small live accounts or prop firm challenges, emphasizing starting small and growing gradually, rather than gambling with large sums. And finally, once you've achieved consistent profitability, we'll talk about sharing your journey and inspiring others, because success isn't just about making money, it's about contributing back to the community that supported you. Now, here's what I want you to understand about this roadmap. It's comprehensive, it's thorough, and yes, it requires time and dedication. You might be thinking, can't I just skip a few steps? Can't I accelerate this process? And technically, yes, you could try. But here's what I've observed over 4 years. Traders who skip steps almost always end up coming back to fill in those gaps later, usually after they've lost money and confidence. The traders who succeed, the ones who actually make it to consistent profitability, are the ones who follow a structured path. They might not always follow this exact roadmap, but they follow some systematic approach that covers all the essential elements we're about to discuss. I had a student, my very first mentoring student, actually, who followed this roadmap diligently. He didn't skip steps. He didn't try to rush. And you know what? He got funded by a prop firm in just 2.5 months. 2.5 months from complete beginner to funded trader. That's remarkable. And it happened because he trusted the process and executed each step thoroughly. So as we go through these 8 steps in detail, I want you to approach this with commitment. Don't look for shortcuts. Don't think you'll be the exception who doesn't need all this preparation. Embrace the journey, follow the roadmap, and you'll give yourself the best possible chance of joining the small percentage of traders who actually succeed in this business. Are you ready to begin this structured journey? Brilliant, because over the next several slides, we're going to break down each of these 8 steps in comprehensive detail. Let's get started, shall we? Right then, here we are at step 1. Join Discord and get familiar with TradingView. Now this might seem like a rather straightforward, almost mundane first step, but I assure you, it's absolutely foundational to everything that follows. So let's break this down properly. First point, join Discord for fast Q&A and community. We've already discussed the Discord community, but I want to emphasize why this is your very first action. The reason is simple, you're going to have questions. Many questions, and having immediate access to a community where you can get those questions answered quickly is invaluable. When you're learning something new and you get stuck, what happens? Your momentum stops, your enthusiasm wanes. You might even start doubting whether you can do this at all. But when you can ask a question and get a helpful response within hours or even minutes, you maintain that forward momentum, you stay engaged, you keep learning. And here's the thing. I'm more active on Discord than anywhere else. If you leave a comment on a YouTube video, I might see it eventually, but it could take days. On Discord, I check regularly throughout the day. So if you've got a pressing question, maybe you're confused about how to identify a fair value gap on your chart, or you're not sure if your market structure analysis is correct, you can get an answer much more quickly on Discord. Now the second crucial element of step 1, use TradingView, your most essential charting tool. Ladies and gentlemen, TradingView is going to become your best friend in this trading journey. This is the most important software you will use, not your broker's platform, not some fancy indicator suite someone's trying to sell you. TradingView. Why TradingView specifically? Several reasons. First, it's universally accessible. Whether you're on Windows, Mac, Linux, or even using a tablet or phone, TradingView works seamlessly. Second, it has an enormous library of tools and indicators, both built-in and community-created. Third, and perhaps most importantly, it's what I use in all my educational content. When I'm showing you how to analyze a chart, I'm using TradingView. So if you're using the same platform, you can follow along exactly and replicate what you're seeing. Now here's something brilliant about everything I teach. It applies to all asset classes. You see this here. Crypto, stocks, options, binary options. The principles I teach about market structure, about fair value gaps, about order blocks, about supply and demand zones. These concepts work across every single market. It doesn't matter whether you're looking at a Bitcoin chart, a currency pair like Euro USD, a stock like Apple, or a futures contract on the S&P 500. The market structure still forms in the same way. Price still moves based on supply and demand. The psychology driving these movements remains consistent. This universality is extraordinarily powerful, because it means you're not locked into one specific market. Maybe you start learning with Forex examples because that's what I primarily trade. But then you discover you're more interested in cryptocurrency. Brilliant. All the concepts transfer directly. You don't need to relearn everything from scratch. Now, let me tell you what you should be focusing on as you get familiar with TradingView. Focus on reading market structure and identifying fair value gaps. These two skills are absolutely fundamental to everything else you'll learn. Market structure. Understanding how markets move in trending phases versus ranging phases. Identifying higher highs and higher lows in uptrends, lower lows and lower highs in downtrends. This is the foundation. If you can't read market structure, you're essentially trying to trade while blind. And fair value gaps. These are price inefficiencies where the market moved so quickly that it left behind gaps that typically get filled later. Learning to identify these on your charts is crucial because they represent high-probability trading opportunities. So here's your action plan for step 1. First, join the Discord community today. Right after watching this, go to the link in the description and join. Introduce yourself. Have a look around at the different channels. Get comfortable with the platform. Second, create a TradingView account if you haven't already. The free version is perfectly adequate to start with. You don't need to pay for premium features initially. Spend some time clicking around, exploring the interface, drawing lines on charts, adding indicators, getting comfortable with the tools. Watch some beginner TradingView tutorials if needed. There are plenty on YouTube. Learn how to change time frames, how to draw trend lines, how to add shapes and annotations. Just play around with the software. The more comfortable you become with TradingView, the easier your learning journey will be. And here's the crucial bit. Don't rush through this step. Don't think, oh, I'll just quickly sign up and move on to the next step. Actually engage with both the Discord and TradingView. Spend a few days getting familiar. Ask questions in Discord about anything that confuses you. Open charts and start looking at market structure, even if you don't fully understand it yet. This foundation, community connection, and tool familiarity will support everything else you learn. So give it the attention it deserves, and you'll thank yourself later. Now, continuing with step 2, let's discuss the market-specific videos in more detail. This is rather important because while the core principles are universal, each market has its own particular characteristics that you need to understand. Specific videos guide Forex and futures traders. As you work through the beginners playlist, you'll notice that I've created dedicated videos specifically for Forex traders and futures traders. These aren't just brief mentions. These are comprehensive videos that walk you through exactly how to apply the concepts you've learned to these specific markets. Why have I done this? Because while market structure, order blocks, and fair value gaps work the same way across all markets, the practical application can differ slightly. Forex, for instance, operates 24 hours a day, 5 days a week. There are specific trading sessions: the London session, the New York session, the Tokyo session, and understanding when these overlap, when liquidity is highest, when spreads are tightest. This matters for your trading. Futures markets have their own quirks. They have specific opening and closing times. They have settlement procedures. Different futures contracts have different contract sizes, margin requirements, and tick values. If you're planning to trade futures, you need to understand these specifics. And that's what these dedicated videos cover. Now, crypto and options advice is also included, though with some important caveats. Let me be straightforward about options trading. I don't cover it extensively on this channel, and there's a good reason for that. In my experience, most people who start with options eventually migrate to Forex or futures anyway. Options have expiration dates, which means you're not just fighting market direction, you're also fighting time decay. They involve complex concepts like the Greeks: delta, gamma, theta, vega, which adds unnecessary complexity for most traders. If you're committed to learning options, by all means pursue it, but I genuinely believe most traders will find Forex or futures more straightforward and ultimately more profitable. Now, regarding cryptocurrency trading, I need to be honest with you about my reservations. I don't trust most of the crypto brokers out there. We've seen too many exchanges collapse: Mt. Gox, FTX, and numerous others. We've seen traders unable to withdraw their funds, accounts frozen without explanation, and all sorts of regulatory uncertainties. That said, If you're absolutely determined to trade crypto, here's my advice. Stick to Bitcoin and Ethereum. These are the most established cryptocurrencies. They have the deepest liquidity, the most regulatory clarity, and they're available on more reputable platforms. And regarding platforms, use something established, like Coinbase, which is what I currently use for any crypto exposure. It's a publicly traded company with regulatory oversight. Is it perfect? No platform is, but it's significantly more trustworthy than many alternatives out there. But here's the absolutely crucial point, and please pay attention to this. Market structure applies to everything, regardless of the specific market. Even if you want to trade only cryptocurrency, you should still watch the Forex and futures videos in the beginners playlist. Even if you're only interested in stocks, watch the futures examples. Why? Because every chart example you see reinforces the same underlying principles. When I'm showing you how to identify a market structure break on a Euro-USD chart, that exact same principle applies to Bitcoin, to Apple stock, to gold futures, to whatever you're trading. The candlesticks might be from different markets, but the analysis technique is identical. Different markets are just different instruments playing the same fundamental tune. Think of it like this. If you're learning music theory, it doesn't matter whether the examples are shown on a piano or a guitar. The notes, the scales, the chord progressions, they're universal. You're not learning piano theory or guitar theory. You're learning music theory that applies to all instruments. Trading is the same. You're not learning Forex trading or crypto trading as completely separate disciplines. You're learning market analysis, price action reading, structure identification, skills that apply universally across all tradable instruments. So here's your action plan for this continuation of Step 2. As you work through the beginners playlist, make sure you watch the market-specific videos even if you think you're only interested in one particular market. If you want to trade crypto, still watch the Forex video. If you want to trade Forex, still watch the futures video. Each video provides different examples, different contexts, and seeing the same concepts applied across different markets will deepen your understanding far more than seeing them applied to only one market repeatedly. And when you come across the sections discussing crypto or options, pay attention to the warnings and recommendations. I'm not trying to discourage you from trading what you want to trade. I'm simply sharing the wisdom gained from experience and observation. Take that advice seriously, and you'll save yourself potential headaches down the line. Remember, the market you choose matters less than your understanding of market dynamics. Master the principles, and you can trade anything. That's the power of proper education. Excellent! Now we've reached Step 3. Watch Supply and Demand Series Plus, Choose Strategies. This is where your education really starts to accelerate, because you're building upon the foundation you established in the beginners playlist. The Supply and Demand series is core learning for any market. This is absolutely essential education, regardless of what you're planning to trade. Supply and demand. These are the fundamental forces that drive every price movement in every market. Understanding these concepts at a deep level will transform your trading. Now, you might be thinking, I already understand supply and demand. When there's more buyers than sellers, price goes up. Well, yes, that's the surface level understanding. But the Supply and Demand series goes much, much deeper. We're talking about identifying specific zones where institutional orders are likely resting. We're discussing how to recognize imbalances in the market that create high probability trading opportunities. You'll learn how to identify supply zones, areas where selling pressure is likely to enter the market, and demand zones, areas where buying pressure is concentrated. But more than that, you'll learn when these zones are valid, when they've been invalidated, and how to use them in conjunction with market structure and fair value gaps to create a complete trading approach. Download linked presentations for notes. Now, here's something brilliant that I provide. All of my presentations are linked in the video descriptions. You don't need to frantically scribble notes while watching. You can download the actual presentation slides I use in the videos. This is enormously valuable because you can have the presentation open on one screen and TradingView on another screen. You can refer back to specific points without having to scrub through video looking for that one particular explanation. You can add your own notes directly to the presentation files if you wish. Open charts as you watch. Re-watch any unclear concepts. This is crucial. Don't just passively consume this content. Active learning is what creates lasting understanding. Here's what I recommend. Have TradingView open while watching these videos. When I show an example on a chart, pause the video and try to find similar examples on other charts. Test your understanding in real time. For instance, if I'm explaining how to identify a demand zone, don't just nod along. Pause the video, open a few different charts, maybe Euro US dollar, Bitcoin, Apple stock, and try to identify demand zones yourself. Then resume the video and see if your analysis matches what I'm teaching. Fourth, if something doesn't click, stop and address it immediately. Rewatch the video section, ask questions in Discord, look at additional chart examples. Don't accumulate gaps in your understanding. And fifth, be patient with yourself. This isn't a race. The supply and demand concepts might take a week or two to really internalize. That's perfectly normal. Give yourself time to develop genuine understanding, rather than rushing to tick boxes and move on. Do this properly, and you'll have developed skills that most traders never master. And that's what separates consistent winners from the 95% who struggle. Now then, we've arrived at step 4, and notice that crucial word at the top, optionally. This is the Watch Entire ICT playlist. And I want to explain when and why you might want to pursue this additional education. For those needing more education, this playlist is ideal. If you've completed the Beginners playlist and the Supply and Demand series, and you still feel like you need more foundational knowledge before moving forward, the ICT playlist is your resource. ICT stands for Inner Circle Trader. It's a particular methodology for reading markets that has gained considerable popularity, and I've created educational content around it. Now, let me be clear about something. The core concepts in the ICT material overlap significantly with what you've already learned in the Beginners and Supply and Demand content. You'll encounter familiar ideas like market structure, liquidity, and order blocks, but perhaps explained from a slightly different perspective or with additional nuance. Special focus on trading the news. One thing the ICT playlist does particularly well is address how to trade around major news events, economic announcements, things like non-farm payrolls, central bank interest rate decisions, GDP releases. These create significant market volatility, and knowing how to navigate these events is valuable. Many traders avoid trading during news releases entirely, which is perfectly valid. But if you want to understand how to potentially capitalize on these high volatility periods, or at minimum, how to protect yourself from them, the training on news in this playlist is genuinely useful. You'll learn about concepts like buy the rumor, sell the news in practical terms. You'll understand why markets sometimes move counterintuitively on news releases. For instance, positive economic data causing a currency to weaken because it was already priced in. These insights can prevent costly mistakes. When stuck, ask questions in Discord. Get simplified explanations. Now, here's what I want you to understand. If you're working through the ICT content and something isn't clicking, don't struggle in silence. Don't spend hours or days confused about a particular concept. Come to Discord and ask. Say, I'm watching the ICT video on liquidity voids, and I don't understand the difference between a void and a fair value gap. Or, the concept of optimal trade entry is confusing me. Can someone explain it more simply? What often happens is that trading educators, in trying to be comprehensive, sometimes make things sound more complicated than they need to be. Right then, we've reached step 5. And this is where things get real. Pick one strategy and backtest thoroughly. And I want to emphasize that opening statement because this is where many traders go catastrophically wrong. Do not make your own strategy yet. I cannot stress this enough. You've just spent weeks learning the fundamentals. You've absorbed concepts about market structure, supply and demand, fair value gaps. And now there's a temptation, a strong temptation, to think, right, I've learned all this. Now let me create my own unique strategy combining all these elements. Don't. Seriously, don't. Not yet. You're still in the learning phase. You don't yet have enough experience to know which elements work consistently and which don't. You don't know how different concepts interact under various market conditions. Creating your own strategy at this stage is like a medical student after 2 years of study deciding to invent a new surgical procedure. You need more experience first. Use the proven strategies provided. Swing trading or scalping. I've created 2 complete strategies for you. A swing trading strategy and a scalping strategy. These have been tested. I've traded them. I know they work. I know their strengths and weaknesses. I know what market conditions favor them. The swing trading strategy is for those of you who don't want to be glued to charts all day. You're looking at higher time frames, holding positions for days or even weeks, making fewer trades, but typically with larger price movements. The scalping strategy is for those who want more active trading, looking at lower time frames, in and out of positions within hours or even minutes, making more trades with smaller price movements but higher frequency. Both strategies are thoroughly explained in dedicated videos. Both work. Both have specific entry criteria, specific exit criteria, specific risk management rules. Everything you need is there. Choose your market specialization, futures, Forex, or crypto. Now, alongside choosing a strategy, you need to choose which market you're going to specialize in. Notice I said specialize, not dabble in. You're not trying to trade everything. You're becoming an expert in one specific market. If you choose futures, you're focusing on futures. Learn the specific contract you're trading, its typical behavior, its active trading hours. If you choose Forex, pick 1 or 2 currency pairs and become intimately familiar with them. If you choose crypto, despite my earlier reservations, focus on Bitcoin or Ethereum, not chasing random altcoins. Why specialize? Because each market has its own personality. Euro-US dollar behaves differently from crude oil futures, which behaves differently from Bitcoin. By focusing on one market, you'll start recognizing patterns, understanding typical volatility, knowing what normal looks like. That expertise is invaluable. Backtest for at least 300 trades, more if needed. Now we come to the crucial element. Backtesting. This is where you test your chosen strategy on historical price data to see how it would have performed. And I'm being very specific here. At least 300 trades. Why 300? Because you need statistical significance. If you backtest 20 trades and they're all winners, that tells you almost nothing. You might have just picked a particularly favorable period. But if you backtest 300 trades across different market conditions, trending markets, ranging markets, volatile periods, quiet periods, bull markets, bear markets. Now you have meaningful data. You'll discover your strategy's win rate. Maybe it wins 60% of the time. You'll discover your average risk-to-reward ratio. Maybe you risk 1% to make 2% on average. With those statistics, you can calculate expected value and determine if the strategy is genuinely profitable over the long term. And here's the key. If after 300 trades the results aren't satisfactory, backtest more. Maybe you need 500 trades, maybe 700. The goal isn't to tick a box saying, "I backtested." The goal is to develop complete confidence in your strategy and understand its characteristics thoroughly. How do you backtest? You'll scroll back on your charts in TradingView. Look for your entry setups. Mark where you would have entered according to your rules, where you would have placed your stop loss, where you would have taken profit, and record the result. Then move forward through time and repeat. Again and again and again. Yes, it's tedious. Yes, It takes time. But this is the work that separates professional traders from gamblers. Professionals know their strategy's statistics before risking real money. Gamblers skip this step and wonder why they lose. And here's something important. Backtest honestly. Don't fudge the results. Don't give yourself entries you wouldn't have seen in real time. Don't move your stop loss in hindsight to avoid a losing trade. Honest backtesting means following your rules exactly, even when it results in losses. The strategies available are swing trading and scalping. Just to reiterate, because I want absolute clarity. You have 2 proven strategies to choose from. Watch the respective videos, understand the complete rule set, then pick one. Just one, and commit to backtesting it thoroughly. Don't try both simultaneously. Don't try to backtest swing trading for 150 trades and scalping for 150 trades. Pick one, backtest it for 300+ trades, and only then consider exploring the other if you're unsatisfied. Your action plan for step 5. First, watch both strategy videos to understand what each involves. Second, choose the strategy that better aligns with your schedule, personality, and goals. Third, choose your market specialization. Fourth, set up your backtesting spreadsheet to track results. And fifth, start the systematic process of backtesting at least 300 trades. This step might take weeks. That's fine. That's expected. Don't rush it. This foundation, knowing your strategy's statistics inside and out, this is what enables you to trade with confidence when real money is on the line. Do this thoroughly, and you're positioning yourself for success. Now, continuing with step 5, I want to address something that I find genuinely frustrating, and I need to be rather direct about this. Why use provided strategies? This is absolutely critical. Don't be egotistic, arrogant, or prideful about using proven strategies. I know this might sound harsh, but I need you to hear this truth. When new traders immediately try to create their own strategies, it's usually ego talking, not wisdom. You've just learned these concepts. You don't yet have the experience to know which combinations work consistently. I've already done all the hard work for you. Years of testing, hundreds of trades, refining entry criteria, adjusting exit rules, optimizing risk management. I've gone through the painful process of discovering what doesn't work, so you don't have to. And I'm offering you the final, proven result, completely free. So please, and I cannot emphasize this enough, don't be so egotistic or arrogant or prideful that you refuse to use these strategies. Don't think, well, I'm clever enough to create something better immediately. That's not confidence. That's hubris, and the markets have a rather brutal way of teaching humility to the arrogant. Here's what happens, and this is tremendously frustrating for me as an educator. People ask me questions about certain trade entries that have nothing to do with my strategy. They've created their own approach. It's failing, and they want me to troubleshoot it. But I have no idea why their strategy is failing when it's their strategy. Only you know what you put into your custom strategy. I don't know your entry rules. I haven't backtested it. I have no familiarity with it. I might be able to suggest a few different things based on general principles, but I can't give you specific, actionable guidance on fixing a strategy I know nothing about. But if you have questions when it comes to a trade entry involving my strategy, I'll be able to give you a pretty good answer as to what you can do to fix it, whether I thought it was a good entry or not, whatever the case may be, because it's my strategy. I know every element of it. I've seen how it performs in different market conditions. Not only that, all my strategies can be paired up with all my daily bias videos that I've made, so everything works together as a cohesive system. The only thing that might change is the win rate or the amount of trades you'll find. But even then, the risk to reward doesn't really change much. This is a complete trading system I'm handing you, not just a collection of random concepts, but an integrated approach where everything fits together. The strategy defines your entries and exits. The daily bias videos help you understand current market context. The risk management rules protect your capital. It all works together. So please, just pick one of my strategies and backtest it. Get used to it. Get really good with it. Become an absolute expert at executing it. And if you feel like you need to backtest even more because maybe you just don't like the results you're seeing, backtest it again, backtest it even more. Give it a proper chance. Don't backtest 50 trades, see results you don't love, and immediately think, well, this strategy doesn't work, I'll create my own. No, backtest 300 trades, then backtest another 100. Make sure you've tested it across all market conditions: trending, ranging, volatile, quiet. And when I asked you to choose what market to specialize in, I'm talking about whether you want to be a futures trader, a Forex trader, a crypto-only trader, or a crypto futures-only trader. Just choose what it is that you want to specialize in, and then pick one of my strategies and try to apply it in that specific market. If you have any questions, and you will have questions, please just let me know and I'll do my best to answer you. That's what the Discord community is for. That's why I've created all this educational content. I want you to succeed, but I can only help you effectively if you're using an approach I'm familiar with. So please, use one of my strategies, at least for now, at least while you're learning, at least until you've become consistently profitable and truly understand why certain elements work and others don't. Then, and only then, if you want to modify things or create your own approach, you'll have the experience and knowledge to do so intelligently. But right now, you need to follow proven strategies. Trust the process, execute the system, and watch your understanding and results improve dramatically. Your action plan. First, set aside your ego. Second, commit to using one of the provided strategies exactly as designed. Third, backtest it thoroughly, 300 trades minimum. Fourth, ask questions when you're unsure, but ask them about my strategy so I can actually help you effectively. And fifth, be patient with the process. Mastery takes time, but it's absolutely achievable if you follow the proven path. Do this, and you're positioning yourself for genuine, lasting success in trading. Excellent. We've reached step 6. Demo trade for 6 months to 1 year and journal. Now this is where you transition from historical backtesting to real-time execution, and it's absolutely crucial. Demo trade for 6 months to 1 year. Now I want to be clear about something. You don't absolutely have to demo trade for 6 months. That's a recommendation, not an absolute requirement, but I would highly recommend it for most people. Here's why. Backtesting is wonderful for understanding your strategy's statistics and potential, but it's fundamentally different from trading in real time. When you're backtesting, you can see the entire price movement. There's no emotional pressure. You're not watching your account fluctuate in real time. You don't feel the anxiety when price moves against your position. Demo trading bridges that gap. You're executing your strategy on live market data, but without risking real capital. You experience the emotions, the uncertainty before entering, the anxiety while in a trade, the temptation to exit early when in profit, the fear when seeing unrealized losses. But you're experiencing all this in a safe environment, where mistakes don't cost you actual money. Watch my journaling video. This is tremendously important. I'll leave that video in the description, and I cannot stress enough how valuable proper journaling is. Most traders don't journal properly, and it costs them dearly. What should you journal? Everything. Every trade you take, the market conditions, your entry reason, your emotional state before entering, what happened during the trade, your emotional response to the outcome, what you learned. This creates an invaluable database of your trading psychology and performance. The journaling video I've created shows you exactly how to set up an effective trading journal, what to track, how to analyze your data, and how to use it to improve continuously. It's not just about recording trades. It's about understanding yourself as a trader. Now, here's something rather inspiring. I had a student, my very first mentoring student actually, and I want to tell you about his journey because it demonstrates what's possible when you follow this process properly. He did everything I told him to do, everything. He watched the playlists completely, he chose a strategy and backtested it thoroughly. He demo traded with discipline, he journaled every trade. He didn't skip steps. He didn't look for shortcuts. And you know what happened? He got funded after 2.5 months. 2.5 months. From complete beginner to passing a prop firm challenge and getting a funded account. That's remarkable, isn't it? But it didn't happen by accident. It happened because he trusted the process and executed each step thoroughly. Now, I'm not saying you'll definitely achieve the same timeline. Everyone's learning curve is different. Some people might need longer, maybe 4 months, 6 months, even a year. That's perfectly fine. The point isn't to rush. The point is to follow the proven process until you achieve genuine competence. But this student's success demonstrates that it's absolutely possible to progress relatively quickly if you're disciplined and committed. So if you want to learn exactly what his process was, you can take a look at that first student interview video I've published. It's inspiring and educational. Now, about the journaling video, it helps you create your own mini prop firm challenges. What does that mean? Well, prop firm challenges have specific rules: maximum daily loss limits, maximum total loss limits, profit targets. These rules exist to ensure you trade with discipline. You can create similar rules for yourself in demo trading. For example, I will risk no more than 1% per trade. My maximum daily loss is 3%. If I hit that, I stop trading for the day. My profit target for this challenge is 10% total account growth. By imposing these structure and rules on yourself during demo trading, you simulate the psychological pressure of trading with real money, but without the actual financial risk. It's brilliant preparation for eventually trading live or taking a real prop firm challenge. This helps you refine your skills and helps you get used to trading live. Even though you're not technically trading with real money, you're trading live with the market using a demo account. The price movements are real. The execution is real time. The emotions are largely real. Only the financial consequences are absent. And that absence of financial consequences, that's precisely what allows you to develop your skills without the devastating impact of early losses. Most traders who jump straight to live trading without adequate demo experience lose their accounts quickly. Not because they don't understand the strategy, but because they can't manage the emotional pressure. Demo trading for several months allows you to develop emotional resilience gradually. You learn to stay calm during drawdowns. You learn to avoid overtrading after wins. You learn to follow your strategy mechanically, even when your emotions are screaming something else. These are the skills that separate winners from losers. Your comprehensive action plan for Step 6. First, set up your demo trading account. Most brokers offer free demo accounts with real-time data. Second, watch the journaling video and set up your trading journal. Third, define your mini prop firm challenge rules. Maximum daily loss, overall loss limit, profit target. Fourth, commit to demo trading for at least several months. Don't rush this. Fifth, journal every single trade, without exception. And sixth, review your journal weekly to identify patterns in your decision-making and emotional responses. This step might feel tedious. You might be eager to get to real money trading, but I promise you, the traders who spend adequate time in demo trading are the ones who eventually succeed with real money. The ones who rush this step, they typically lose their first live account, then come back to demo trading anyway, but now with less confidence and less capital. Don't make that mistake. Do this properly, and you'll transition to live trading with confidence, competence, and realistic expectations. That's the path to sustainable success. Right then, we've reached Step 7. Open a small live trading account or join a small prop firm challenge. This is where you finally transition to trading with real money. And we need to discuss this very carefully. Start small. And I mean genuinely small. Let me be very specific about this. And please note, this is not financial advice. This is just general education. I'm not your financial advisor. Don't sue me. With that disclaimer out of the way, here's what I would do if I were in your position. If you're someone making maybe £500 a week, the maximum I want you to put in that trading account is about £50. That's it. If you're making £1,000 a week, put maybe £100 in the account. Notice how small these amounts are? There's a reason for this. When you first start trading with real money, Even though you've demo traded extensively, your psychology changes. Suddenly the losses feel real, because they are. That 50 or 100 pounds represents real earnings, real work, and that emotional shift affects your decision-making. By starting with very small amounts you can genuinely afford to lose without it affecting your life, you get to experience this psychological shift without devastating consequences. If you lose that 50 pounds learning to manage your emotions with real money, it's a cheap lesson. If you lose 5,000 pounds learning the same lesson, it's devastating. Now, you can use any of the brokers I have down in my description. I have a couple of brokers that I recommend. They're all good, reputable brokers. You can check those out. But listen, and this is important, please don't rush into putting big amounts of money into your account or spending too much money on a prop firm challenge. I see this constantly. Someone watches a few videos, maybe does a bit of demo trading, and thinks, right, I'm ready. I'll put 5,000 pounds in and start making serious money. No. Stop. That's gambling, not trading. Or they immediately purchase a 100,000 pound prop firm challenge for 300 pounds, thinking they'll pass it quickly and start earning. Then they fail the challenge, buy another one, fail again, and suddenly they've spent thousands of pounds on challenges they weren't ready for. Master flipping accounts. Master growing your accounts. What do I mean by this? I mean become exceptionally good at turning a small account into a slightly larger account consistently. Then turn that larger account into an even larger one. This is a skill, the skill of consistent growth, and it's what actually matters. You see, making 3% a month is more than enough. I know that doesn't sound exciting. You've probably seen advertisements claiming 20% monthly returns, or people showing screenshots of doubling accounts weekly. But those are either lies, unsustainable risk-taking, or both. 3% monthly growth. That's what professionals target. And you'd be surprised how well that compounds. On a 100,000 pound prop firm account, 3% monthly is 3,000 pounds. Consistently, month after month. That's excellent money for most people. But more importantly, 3% monthly growth is achievable with proper risk management. You're not gambling. You're not risking huge percentages on single trades. You're trading with discipline, following your rules, and growing steadily. That's sustainable. That's professional. Prop Firm Guide video is available. Watch it. I have a comprehensive video guide about prop firms that you absolutely should watch if you're planning on joining one. It covers which firms to consider, which to avoid, what the rules typically involve, how to approach the challenge intelligently. Recommended brokers are in the description. As I mentioned, I list several reputable brokers in the video description. These are brokers I'm familiar with, that have good reputations, reasonable spreads, and proper regulation. Check those out when you're ready. But here's the crucial message I want you to take from this slide. Don't rush with big amounts. This is not the time to be aggressive with your capital. This is the time to be conservative, thoughtful, and measured. Your goal in this step isn't to make huge profits immediately. Your goal is to successfully transition from demo trading to live trading while maintaining your discipline and emotional control. If you can trade a £50 account with the same discipline and strategy adherence you had in demo, that's success. That's progress. Then, once you've demonstrated to yourself that you can maintain discipline with real money, you can gradually increase your account size. Maybe after 3 months of consistent, disciplined trading with £50, you add another 50, then another, growing gradually, always keeping the account size within your financial comfort zone. Or you attempt a small prop firm challenge, maybe a £10,000 account challenge, not a £100,000 one. Past that, demonstrate consistent profitability. Then consider larger challenges. This gradual approach might seem frustratingly slow, especially when you see people online claiming to have made thousands in their first month of live trading. But here's the reality. Most of those people either lost it all shortly after, or they're not being honest about their results. The traders who actually make it long-term, they started small. They grew gradually. They prioritized consistency over quick profits. They treated trading as a skill to develop, not a lottery to win. Your action plan for Step 7. First, ensure you've completed Step 6 properly. several months of disciplined demo trading with detailed journaling. Second, watch the prop firm guide video if considering that route. Third, choose your approach, small personal account or small prop firm challenge. Fourth, if opening a personal account, deposit only an amount you can genuinely afford to lose. 50 to 100 pounds is plenty to start. Fifth, trade this account with the exact same strategy and discipline you developed in demo trading. And finally, and this is critical, give yourself permission to start small and grow slowly. You're not in a race. You're building a sustainable trading career, and that requires patience, discipline, and realistic expectations. Do this properly, and you'll join the small percentage of traders who actually succeed long-term. Now, continuing with step 7, let's discuss prop firms and account management in more depth. This is rather important because there are some significant pitfalls you need to avoid. Master flipping accounts and growing your accounts. Let me expand on this concept because it's absolutely fundamental. Flipping an account means taking it from one level to another through consistent, disciplined trading. Not through luck, not through massive risk-taking, but through proper execution of your strategy with appropriate risk management. Let's say you start with a £50 account. Your goal isn't to turn it into £5,000 in a month. Your goal is to grow it consistently, maybe to £60, then 75, then 100, demonstrating to yourself that you can execute your strategy profitably over time. This skill, consistent account growth, is what prop firms are looking for. They don't want traders who occasionally hit home runs but mostly strike out. They want traders who consistently hit singles and doubles, growing accounts steadily without major drawdowns. And making just 3% a month on a £100,000 account is really good money. Let's do the maths, shall we? 3% of 100,000 is £3,000 per month. That's £36,000 per year from one prop firm account, trading conservatively with proper risk management. Many people live quite comfortably on £36,000 annually, and that's just one account, trading conservatively, targeting modest returns. Scale that to multiple accounts or larger account sizes, and you can see how this becomes a genuine career. But the key, and I cannot stress this enough, is that 3% monthly is achievable sustainably. You're not swinging for the fences. You're not risking 5% per trade trying to double your account. You're trading with discipline, accepting small drawdowns, and growing steadily. That's professional trading. Find a prop firm that allows you to trade with unlimited days. This is absolutely crucial. Some prop firms impose time limits on their challenges. You must achieve the profit target within 30 days, or 60 days, or whatever, and that creates immense psychological pressure. When you have a time limit, you feel compelled to trade even when your strategy doesn't present setups. You start forcing trades, taking lower probability entries, because the clock is ticking. This is the opposite of disciplined trading. Find a prop firm that gives you unlimited time to pass the challenge. This way, you can wait for proper setups. You can take only high probability trades that match your strategy criteria. You're not gambling against a deadline. You're executing your proven approach patiently. So that way, you don't feel that burden to get it done under a certain amount of time. You can trade properly, following your rules, without the psychological pressure of an arbitrary deadline. Several reputable prop firms offer unlimited time challenges, so seek those out. Do your own research on which prop firm you want to use. I can provide some guidance in my prop firm video, but ultimately, you need to do your due diligence. Read reviews, check their payout history, understand their rules thoroughly, join trading communities, and ask about people's experiences. Different prop firms have different rules, different scaling programs, different payout structures. Some might be better suited to your trading style or goals. Research carefully before spending money on a challenge. Now, here's something important. Definitely stay away from Apex. I'm being very specific here, and there are other firms I've had poor experiences with. When I was going to get a payout, when I had successfully passed their challenge and traded profitably on the live account, they denied my payout, and when I asked them why, they would just change the rules arbitrarily. Oh, well, actually, you violated this rule. What rule? That wasn't in the original terms. Well, it's in our updated terms. It's absurd. It's frustrating, and it's unfortunately common in some corners of the prop firm industry. This is another reason why I don't really like dealing with prop firms in general, because their rules, for some reason, always seem to change every time I want to get a payout. It's become a pattern. You trade properly, meet all the stated requirements, and then suddenly there's some technicality or newly interpreted rule that disqualifies you. Now, not all prop firms are like this. There are reputable ones that honor their agreements and pay out consistently. But the bad ones? They're frustrating enough that I want to warn you explicitly. Do your research, be wary, and if something seems off, trust your instincts. That being said, prop firms can be a brilliant way to trade larger accounts without risking large amounts of your own capital. Instead of needing £50,000 of personal capital to trade professionally, you can pass a challenge for maybe £200 and trade a £50,000 account. The leverage prop firms provide is genuinely valuable when the firm is reputable. Your action plan for this continuation of Step 7. First, thoroughly research prop firms before purchasing any challenge. Second, prioritize firms offering unlimited time challenges to reduce psychological pressure. Third, read all the rules carefully. Not just the main terms, but all the fine print. Fourth, join trading communities and ask about others' experiences with specific firms. Fifth, start with a smaller challenge account rather than the largest one available. And sixth, approach prop firm trading with realistic expectations. It's not free money. It's not easy. You need to demonstrate genuine trading skill under the firm's specific rules and constraints. But if you followed all the previous steps properly, you'll have developed that skill. Remember, whether you're trading a small personal account or attempting a prop firm challenge, the fundamentals remain the same. Proper risk management, disciplined strategy execution, emotional control, consistent application of your proven approach. These principles don't change based on account size or whether it's your money or a firm's capital. Master these principles with small amounts first. Then scale up gradually. That's the path to sustainable trading success. Brilliant! We've reached Step 8. Once profitable, share and inspire. This is the final step, and it's about giving back to the community that supported you on your journey. Once you become profitable, I want you to get on your knees and thank the good Lord Almighty. Now, I'm being serious about this, and I want to explain why. Trading success isn't achieved in isolation. Yes, you put in the work. Yes, you maintained discipline. Yes, you followed the process. But there's also an element of blessing, of fortune, of things aligning properly. Be grateful for the opportunity to have learned these skills. Be grateful for having access to free education. Be grateful for the community that answered your questions. Be grateful for the market conditions that allowed you to develop your skills. Be grateful for your health, your mental capacity, your circumstances that made this journey possible. Gratitude isn't just nice. It's psychologically important. It keeps you humble. It prevents the arrogance that often precedes major trading losses. It reminds you that success is something to maintain through continued discipline, not something you've conquered permanently. And share with everyone your journey. This is tremendously important. Once you've achieved consistent profitability, whether that's passing a prop firm challenge, growing a personal account consistently, or receiving your first payout, share that achievement. Make a video if you want to. It doesn't have to be professionally produced, just share your story. Here's where I started. Here's what I struggled with. Here's what finally clicked. Here's my advice for others starting out. This kind of authentic sharing is invaluable to the community. Share your journey in the Discord. Upload your experience there. Tell us how it went so far. What was your process? How long did it take? What were your biggest challenges? What resources were most helpful? What would you do differently if starting over? If you got a payout, let me know. Leave it down in the comments section on the videos, or message in Discord. Say, I passed my prop firm challenge, or I received my first payout, or I've grown my account consistently for 6 months now. These milestones matter. They inspire others. Whatever the case may be, just inspire others. Show other people that it's definitely possible to be a profitable trader and to even make a living out of it. Because you know what happens when people see real success stories? They believe it's possible for them too. And that belief, that genuine possibility rather than false hope, that's what keeps people committed through the challenging learning process.
Your success story
Your real, honest, documented success provides hope without hype. It's not a flashy advertisement promising quick riches. It's genuine proof that following this systematic approach actually works. That's incredibly powerful. But please, don't forget to thank God overall for the blessings that you have and that will come to you. Maintain that gratitude throughout your trading career. When you have winning weeks, be grateful. When you have losing weeks, be grateful for the lessons and the resilience you're building. But please don't blame him for your failures, especially if you know for a fact that you did not put the work in. This is crucial. If you skipped the backtesting, if you didn't demo trade properly, if you rushed into live trading with inadequate preparation, if you ignored risk management rules, those failures aren't divine punishment. Those are natural consequences of insufficient preparation. And if you know that you weren't supposed to do something, and yet you still went on to do it. Maybe you knew you should wait for better setups, but you forced trades anyway. Maybe you knew your position size was too large, but you took the trade regardless. Maybe you knew you were trading emotionally, but you continued anyway. Those failures are your responsibility. Accept them, learn from them, adjust your approach, but don't blame external forces for consequences that resulted from your own choices. Trading, like many endeavors, rewards discipline and punishes lack thereof rather predictably. If you follow the process properly, if you put in the work, maintain discipline, manage risk appropriately, you give yourself an excellent chance of success. If you don't, failure is nearly guaranteed regardless of other factors. So with that being said, let me ask, what do you think about this guide? What has been most valuable? What needs more clarity? Let me know if there's something else that you want me to go into detail with, or if there's something that I missed out that I can explain in more depth, because this is a community. We're all learning together, and your feedback, your questions, your experiences, they help me improve the education I provide to others who follow after you. Your action plan for Step 8. First, achieve consistent profitability. That's the prerequisite for this step. Second, express gratitude for your success and the journey that got you there. Third, document your journey, honestly, both the struggles and the breakthroughs. Fourth, share your story through whatever medium you're comfortable with: Discord post, video, comment section. Fifth, be specific about what worked for you, so others can learn from your experience. And finally, stay engaged with the community. Continue answering questions from newer traders. Continue sharing your ongoing experiences. Continue learning and growing. Trading isn't a destination you reach and then stop. It's a continuous journey of improvement. So when you achieve profitability, celebrate it. Share it, inspire others, give back to the community, and maintain the discipline and gratitude that got you there. That's how you ensure your success continues long-term. I look forward to hearing your success stories. I genuinely do. Every time a student shares their achievement, their first profitable month, their prop firm payout, their consistent growth, it reminds me why I create this content. It's not for money. It's because helping others succeed in trading is genuinely rewarding. So work hard, follow the process, stay disciplined, and I'll see you on the other side when you're sharing your own success story with the community. I'm looking forward to it. And here we are at our final slide, why the playlist matter, foundational learning. I want to bring this full circle and emphasize once more why the structured, sequential approach we've discussed is so critically important. All education on this channel follows a carefully structured, sequential path. This isn't accidental. This isn't random. Every video has been deliberately positioned in the playlist sequence based on how trading knowledge actually builds in a logical, comprehensive way. Think about it like constructing a building. You can't start with the roof. You can't build the second floor before the first. You certainly can't install the windows before you've erected the walls. There's an order that must be followed for the structure to be sound. Trading education works exactly the same way. The playlists lay the groundwork for understanding every concept needed to succeed in day trading. The beginner's playlist establishes fundamental concepts. What is market structure? How do you read price action? What are the basic elements you need to identify on charts? Then the supply and demand series builds on that foundation. teaching you how to identify zones where institutional orders likely reside, how to recognize market imbalances, how to use these zones in conjunction with structure to find high-probability trades. The ICT playlist, if you choose to use it, adds additional perspectives and nuances to these same fundamental concepts. It's not teaching you completely different ideas. It's providing alternative framings and explanations that might help certain concepts click if they haven't already. And throughout all of this, every video, every concept, every example, they're all interconnected. When I reference market structure in a video about order blocks, I'm assuming you understand market structure from earlier videos. When I discuss supply and demand in relation to fair value gaps, I'm building on multiple foundational concepts. This is why skipping around, cherry-picking videos, or thinking you can skip content you believe you already know, these approaches rarely work. You end up with gaps in your understanding. You miss the subtle connections between concepts. You build on a foundation that has weak spots. Don't skip steps. I cannot emphasize this enough. Every block in this educational structure matters. Every video has purpose. Even if a particular video seems to cover something simple, or something you think you already know, watch it anyway. You'll be surprised how often there's a nuance, a detail, a perspective you hadn't fully considered. I've had countless students come to me confused about advanced concepts, and when we dig into their confusion, we discover it stems from gaps in basic understanding. They thought they understood market structure, but they only understood it superficially. They thought they knew how to identify order blocks, but they were missing critical criteria. And then they go back, watch the videos they skipped, and suddenly say, "Oh, now I understand why I was struggling with that advanced concept. I was missing this fundamental piece." That's the power of proper sequential learning. Every block matters. In a building, you can't say, "Well, I'll just skip this section of the foundation. It's probably fine." No. It's not fine. That weak point will cause problems later. The same is true with trading education. Every concept, every principle, every example, they all contribute to your complete understanding. The playlists are your blueprint. They show you exactly what to learn, in exactly what order, to develop genuine competence as a trader. Don't deviate from the blueprint thinking you know better. Architects spend years learning how to design sound structures. I've spent years developing this educational sequence. Trust the process. So here's my final message to you. Commit to the journey. Don't look for shortcuts. Don't skip ahead because you're impatient. Don't think you're the exception who doesn't need the complete foundation. Follow the roadmap, watch the playlists, do the backtesting, practice with discipline, and you will develop the skills needed to succeed. This isn't a get-rich-quick scheme. This isn't a magic formula. This is a comprehensive trading education that, if followed properly, genuinely works. I've seen it work for students. I know it works from my own experience, and it will work for you if you commit to it. So take this knowledge, apply it systematically, follow the 8-step roadmap we've outlined, engage with the community, ask questions when you're stuck, share your progress, learn from others, and slowly, steadily, you'll transform from a complete beginner into a competent, confident trader. The journey won't always be easy. There will be frustrating moments when concepts don't immediately click. There will be losing trades, even when you follow your strategy perfectly. There will be periods where progress feels slow. That's all normal. That's all part of the process. But if you maintain discipline, if you trust the process, if you commit to continuous learning and improvement, you will get there. You will achieve profitability. You will potentially make a living from trading. And you'll look back on this journey with pride, knowing you built something substantial through dedication and proper effort. So with that, I want to thank you for engaging with this complete guide. Whether you're just beginning your trading journey or you've been following for a while, I'm genuinely grateful you're here. I'm committed to providing you with the best education I can, completely free, for as long as I'm able. Use these resources. Follow the roadmap, join the Discord, engage with the community, and let's build your trading success together. I believe in this process. I believe in the power of proper education, and I believe in your potential to succeed if you commit to it. Now go forth, and start your trading journey properly. Follow the steps, trust the process, and I look forward to hearing your success story. Best of luck, and let's make this happen. Peace.